Hey there, fellow traders. Welcome back to Insider Financial. I'm Alex Carlson. This video will recap today's small cap action and discuss the small caps on our radar. First, we have a new research report on a Nasdaq small cap with just a 1.79 million share float. This stock is trading at just under $3 and looks prime for an explosive move. The company has no debt and has $1.73 per share in cash. Insiders own over 10% of the company. And the best part is there's a short in the stock, so there's short squeeze potential. This is the number one small cap on our radar for Tuesday. I will pin the link in the comments section so you can read our full report. And to get our market moving reports on top small caps, click that link in the description or go to insiderfinancial.com/LP/YouTube and sign up with your email. After you sign up with your email, you can then sign up with your mobile number. Text is the fastest way to get all of our reports, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, 1 plus area code and number. Never begin the format 0. It will not work. And after you sign up with your email, you will get a welcome email, which includes a free copy of our ebook, The Insider Financial Guide to Penny Stocks. Our ebook, our email service, and our text messaging service are all free services from Insider Financial. We don't run any Telegram groups, Discords, or paid subscription services whatsoever. Moving on, we are seeing some of our short squeeze plays moving with, first up is MULN Automotive, MULN. This has been a dog with fleas and is finally putting out some meaningful PRs and climbing out of the basement. Over 20% of the float is short. We had two PRs today. First, the company announced the adoption of a limited duration stockholder rights plan. It says here the rights plan is intended to promote the fair and equal treatment of all stockholders and is similar to rights plans adopted by other publicly held companies. And the best part is that the rights agreement is not a financing transaction, and no additional shares of common stock or preferred stock or warrants or convertible notes are currently being issued in connection with the dividend distribution of the rights. The company also announced that it signed an agreement with California-based and HVIP-approved National Auto Fleet Group. For those that have been watching this channel, you know I covered this when the news hit. The HVP, which is HVIP approved and provides up to, this was in California, there's a $45,000 cash voucher at purchase on its EVs. So for the MULN 3, the cash outlay after the voucher and the federal tax credit is only $17,000. So this is really the news that sparked the move in MULN out of the basement, and they keep dropping more and more PRs like this. Again, this is the addition of the California-based commercial dealer, National Auto Fleet Group. National Auto Fleet Group will offer MULN's full line of all-electric commercial vehicles, the MULN 1, Class 1 EV cargo van, and MULN 3, and Class 3 EV cab chassis trucks. So all of this is, again, good news and why we're seeing the stock finally moving. So congrats if you caught the bottom on MULN. In after hours action tonight, we got first up is AIRE making news. They announced that they completed the acquisition of Namche. AIRE is a real estate technology artificial intelligence company. For those of you that have been following the channel or subscribers to Insider Financial, you know we love AI plays. We've been all over AI stocks. You can watch our videos talking about a lot of AI plays for our subscribers. So again, this has been our sweet spot, and we're really happy with a lot of the moves that we've caught in some of these AI plays. Next up is ZETA making news after hours here. Stock closed at 13, trading over $15 in the after hours. They beat first quarter 24 and they guided to accelerating growth this year. Delivered revenue of $195 million. This is an increase of 24% year over year. They grew total scaled customer account to 460. This is an increase of 8 customers quarter over quarter, and super scale customer account to 144. This is an increase of 13 quarter over quarter. Expanded quarterly scaled customer ARPU 11% year over year to 416,000. Generated cash flow from operating activities of $25 million, an increase of 23% year over year, and free cash flow of $15 million, an increase of 51% year over year. So again, cost cutting with revenue growth, all this is working out. And the key here is why the stock is up, raising guidance for each quarter of 2024 with full year revenue growth rate expected to accelerate. So again, hitting the ball out of the park. This has been an underrated, underfollowed company, and it's just been climbing slowly up the charts. A beautiful chart here in ZETA. Next up is HIMS, HIMS. This is him and hers health. It was up over around 11% in after hours trading after announcing revised 2024 revenue guidance above consensus, as well as Q1 results that beat on both lines. Revenue for the year is now seen at $1.2 billion to $1.23 billion. Consensus was just $1.19 billion, so this is $100 million coming in $100 million higher than expected. The adjusted EBITDA guidance range was also raised. In the quarter, HIMS and hers swung to net income around $11.1 million from a net loss in the year ago period. Basic and diluted EPS of 5 cents per share in profit compares to an EPS loss of 5 cents in Q1 2023. So a complete turnaround in HIMS, and this is why the stock is up. It's been more than a double since November of last year. Pulled back from the highs, consolidating here. Looks like we're going to turn around and test the highs again. At the end of the quarter, cash and cash equivalents stood at $105 million. This is a 9% increase from December 31st. The company benefited in the quarter from a 41% year-over-year increase in subscribers to around 1.7 million. Net orders also increased 20% to around 2.5 million. Tomorrow we'll be watching for a pullback in Palantir. This is one of our top AI plays. The stock is down around 10.5% in extended trading, even as the enterprise software company reported first quarter results that topped expectations and raised its full year sales guidance. So just basically a knee-jerk reaction. The stock has been on an absolute tear. Back in May of last year, the stock was under $8. We're here at $25, so we're getting just some profit taking, just some nervous longs in the after hours. Looking to the full year, Palantir now expects sales to be between $2.677 billion and $2.689 billion, above the $2.68 billion analyst estimate and up from the company's prior view of $2.652 billion to $2.668 billion. The company also raised its guidance for adjusted income from operations to between $868 million and $880 million. For this coming second quarter, the Alex Karp-led Palantir expects sales to be between $649 million and $653 million. The estimate was for just $642.75 million. For the period ending March 31st, Palantir earned an adjusted 8 cents per share as revenue rose 20.8% year over year to come in at $634 million. So double-digit growth. Here is the key. Total customer count grew 42% year over year and 11% quarter over quarter. So the company is just on fire, getting government contracts, growing left and right. This is, again, one of our top AI plays. So put this one on your radar screen if it isn't already. Lastly, AGBA is one we've been covering since the company announced its $4 billion merger with Triller. Stock has just been absolutely crushing the short. It's now up 4x since the deal was announced. Congrats to all who have banked. I will also be scanning the pre-market as I do each and every trading day. If I see anything else, I will let subscribers know. That's why signing up is so important. And again, it's completely free. But tomorrow, Tuesday's main focus is our special report on a low float Nasdaq small cap. Click the link in the top comments section to get the ticker and read our full report. At Insider Financial, we put stocks on your radar with potential outsized moves. As I repeatedly stated, there are always opportunities in the markets daily. The important thing is identifying which stocks to be in to grab that money. The key is trading green, not red. We are looking for those momentum plays that have catalysts. It's all about finding momentum before it happens and riding that wave. That's what we're doing here at Insider Financial. And to get our small cap reports, we cover low float, short squeezes, recent IPOs, biotech FDA plays, AI stocks, EV stocks, lithium stocks, and insider buying. Click that link in the description or go to insiderfinancial.com and sign up with your email and your mobile number. There is no spam. Your info is never shared. You can unsubscribe anytime. You can even sign up just to see the level of research we do here at Insider Financial and unsubscribe. Remember, Insider Financial and I are not investment advisors. This video does not provide investment advice. Always do your research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. It is our opinion, meant for informational, educational purposes only, and does not provide investment advice. Past performance is not indicative of future performance. Thanks for joining me today on Insider Financial. Subscribe and ring the notification bell to never miss the latest insights and strategies. Until next time, happy trading. This is Alex Carlson signing off. Bye-bye.